Hey guys, how's it going? It's Andy from Go Investing. Happy Thursday. In today's video, I'm going to be discussing what happened with Macys earnings, the change that I have in my position in the stock. I'm going to talk about how I do my technical analysis, and then I'm going to wrap up the video by talking about the importance of sticking to the trading plan that you set up beforehand. If there's a topic or just a company in general you'd like me to go over, please leave it in the comment section down below and I'll get to it as soon as I can. Also, I'm not a licensed financial advisor and I highly recommend talking to professionals, so I'm looking to find you the best places to put your money going forward. In addition, I really appreciate it if you hit that like and subscribe button, as it would help my channel out a lot. Macys is a company that originally came onto my radar when I was looking at making my 5 top stocks for 2020 video. And just from looking at it, I ended up taking a position at the beginning of this new year. And I've been pretty bullish on it overall. However, today was the day where I finally cut ties with it and sold it at a loss of around 15%, which is a pretty large loss. But going into it, I was very careful in my position size. 15% wasn't a lot of money for me, but it had a lot of potential upside. 50% on the way down sucks, but the way that I saw it, this was my kind of work in progress type of trade, where if it really worked out, I would have made at least 100% on that trade. So it didn't end up working out that way. And in today's video, we're going to be breaking down what came out in the earnings report on Tuesday, and then kind of discuss my thought process on why I ended up finally selling. So Macys earnings came out on Tuesday morning pre-market, and I've kind of gotten to the point where I'm really frustrated when I see earnings coming out pre-market, because in the pre-market, when the beginning of the earnings report came out, things looked really good, and I got the notification that Macys was up 5%, and I was like, fantastic. And then I went to the gym, came back, and Macys was down 5.5%. So the reason that this happens is in early morning trading, there's not a lot of volume, and they see the first good news come out with the Macys earnings and the fact that they beat earnings per share, expectations, and revenue. So the stock shot up 5% and things look really good. Then when the market opened and the full earnings report came out, they saw that they slowed down their guidance for 2020, and that pulled the stock down. So I've gotten to the point now where earnings in the morning is just kind of a frustrating thing. It has the first movement in the morning, and then when all of the traders are able to trade, it goes in the way that it probably should have. So I kind of got faked out on Tuesday morning. So let's talk about the important numbers that came out. So the earnings per share, they beat with $2.12 compared to the $1.95 that the market expected, which is a pretty big beat. But if you compare it to 1 year ago, it's still, I think, down around 11% compared to Q4 of last year. If you've been paying attention to Macys or just retail stocks at all, you'll know that they've had a pretty tough year, and Macys is no different. So seeing this 10% drop in holiday revenue is not that surprising to me overall. Macys had news events come out in the beginning of January that they had a better than expected holiday session, which kind of makes sense why they did pretty well in this quarter. However, still less than it was in 2019. Macys is a work in progress, and the fact that they're beating expectations shows me that they're not as bad as people originally thought. In addition, they beat their expected revenue, which pushed the stock up. So those are the 2 first numbers that are released from the company. But then as they started talking more, I've been very vocal on this channel about it's not about the numbers that they release, it's how they talk about it. And the company's discussion about their future guidance for the next 12 months was not as bullish as people were hoping. As a result, that's what pushed the stock down 5.5%. When I first made my January 2020 portfolio video, I talked about the reason I really liked Macys is it had a fantastic support at around $14.50. This has been something where I've been building off of this level and had been pushing up for a while, and that's why I felt pretty comfortable taking a position. And I was very set in stone that if it broke below that level, I would be cutting ties. However, when it got pretty close to that yesterday, I did not cut ties. And that is another kind of thing that I've learned from trading stocks is when news events come out, I like to have it sit for at least 24 hours. This gives you time to kind of read the full information and have a better understanding of the situation on the company. In addition, Tuesday was a really tough day for the market as it fell pretty hard. So the combination of the poor earnings pulling the stock down as well as the whole market, I didn't want to make my judgment based off this very emotional day in the market. So I waited till I came back from my class that started at 11, finished at noon. I came back, I took a look at the stock. It was at $13.60. The market was pretty flat, and that gave me the sign that it was time to cut ties on Macys. I want to be very clear that the reason that I'm cutting ties with Macys has nothing to do with the earnings. It's just kind of an unfortunate timing that the earnings and dropping below the support happened at the same time. The earnings report I was pretty happy with. I knew that Macys was a work in progress, and that's kind of why I was happy taking a position. I gave it a 15% window to let the stock kind of move the way it wanted to. It was just kind of unfortunate that the earnings drop also coincided with the overall market drop from this week. And the two of those just kind of pushed it below a level that I was comfortable. That $14.50 mark was a level that's been holding since around August of 2019. And once it drops below that, there's a lot of open movement until you hit another support. So I did not want to be anywhere near that. So it's not a company that I'm going to be never trading again. It's something that I'm going to wait to see how the overall market reacts. Because if things start getting better and the fears about the coronavirus start to settle down and the world economy looks pretty solid, that's when I'll start taking a look at Macy's again. Just because I had one poor trade on it, I'm not that upset about it. I traded to the plan that I wanted, and when it didn't go well and it broke past my support, I sold, and I don't have any negative emotions going towards the company. Macy's is a company that I think will succeed in the future. However, it was not the time for me to get in, and I need to learn from that from the future, which I will be writing into my trading journal right after I finish this video. All right, so here we are. This has been a video that's been requested for a while, but I've kind of just been distracted about other things in the market, and I have not been kind of able to sit down and do a technical analysis video. So in this section of the video, I'm going to be discussing how I did my technical analysis for Macy's for taking the position, and then the technical analysis that resulted in me selling my position. So when I'm looking for a more risky trade, I like to go to the 1 year chart first. And the first thing I look at when I come to this page is I just kind of squint my eyes a little bit, as weird as this sounds. I squint my eyes and I look for things that kind of stick out to me. And one of the first things that stuck out to me, and it was actually the price level that was important for my position, was this support and resistance area right here. I like to look for 52-week highs, and I like looking for 52-week lows because they often act as a resistance. So when I first went on to Macy's, this 1450 area was a level that really stuck out to me because it's been respected here once, twice, 3 times, and then had not touched it again until it broke through it today. Another thing I like looking at is gap fills. This has not been respected as much as I was kind of expecting. If I see a gap, I expect it to fill eventually. This bottom side has not been respected as much, but the top side has not been there yet. So I will chart that just for future references. That's usually a big event. The upper areas, not seeing a lot of stuff up here. So I try to avoid charting too much, because having too many lines on your charts makes it very difficult to kind of make quick decisions about it. So we're going to scale out a little bit. One of the things that I like looking for on these longer time frames, I'm back all the way in 2016 at this point, but historical supports and resistances are still valid. And so even though I will be charting this area at $45, there's a potential that Macy's makes it back up there again. And so the thing I saw here was it's a mix of kind of all the things I've been talking about. You have the top of the gap that has been respected as a support twice. And so that's kind of the reason why I like to chart these out, because even though gap fills eventually close most of the time, they can be respected as a resistance in this case. And it's shown that twice, where it's tried to push above this, has not been able to, falls, comes back up, tests it again. And if it ever comes back and tests it again, I want to be kind of alerted of where that's going to be. All right, so another thing I look at is, since I'm more of a buying on good deals, I like making channels, but I don't really care about the top side. I'm kind of just using the channel to show potential range that it could be trading for. And so when I draw this right here, it touches it 3 times very well. And so I just like charting that out. Obviously, this has been a long time ago, so it's not really going to be respected again, but it's just kind of something where if I saw this and the stock was up here, I could maybe predict an entry at this level because of prior price movement. And so it did not break through this, and as it broke at the bottom of this would have been a time that I would cut losses if this is something that I was charting. If I was playing this channel up, if it broke through the bottom of this channel, that's how I would determine when to sell. My selling points can be from a support, it can be from a resistance if I'm trying to sell for a profit, or it can be falling through the bottom of a channel. All right, and so this is the channel that I ended up seeing that kind of led me to take my position. So after it broke out of this upward channel, it went into a pretty steep downward channel. And so if I draw this out, you can see it's touched it a lot on the top side, but it's also been respecting it a decent amount on the bottom side. And so kind of the things I'm looking for on here is the break out of this pattern. And so as we come into back to the 1 year chart, you can see that it started kind of going horizontal right around here. We had earnings that dropped it down to the original $14.50 mark that I've been talking about, and it's kind of been respecting that. And so I was waiting for the break above that level. And so right here is the beginning of the new year, and as it's breaking out of this, I waited until after New Year's, because New Year's has been historically a down day. And so I waited until after that, and I took a position on the second, or on the third, down here at 1640 was my entry. And so this is a level that I was pretty comfortable at. And the reasoning is that it's been respecting the support. So it looks like it's kind of out of this downward trend that it had been in. It was in the downward channel and it's broken past that. And then I had money available, and so it looked like a good opportunity. So I took a position here, and I kind of rode that for a while. And as we go to the 180-day, okay, and then when I go back to the 180-day chart, this is kind of the time frame I was looking at when I finally took my position. So everything on here, I'm seeing a lot of great signs. I'm seeing the respecting of this bottom support. It fell down below it for earnings, and if you come look right here, it pushed down and then immediately got bought back, showing that this 1450 level is a pretty solid support. So I'd seen all the things that would make me want to take a position, and I rode this position for a while. I let it do its thing through the month of January and February, and now that it's finally broken below that, I decided to cut losses. One of the things I was looking for is, since it had broken through this level before and came down to pretty much around the same level it is right now, I was looking to see if it would get bought up by the end of the day. I'm recording this video right before the closing bell, and so at this point you can see that this candle is very full. The buying has not come back in. There's been a lot of selling that's pushed the stock down, but nothing's been buying it back. So that was kind of my final straw to decide, you know what, there's not a lot of love for the stock right now, and it's not something I want to be a part of. So that's why I decided to cut losses. If I had seen this get bought back up to the $14 mark, I would have probably stayed in for another day. But the fact that it's fallen with such volume compared to the past couple days gives me enough reasoning to finally sell my position. Finally, I want to talk about the importance of making sure that you have a trade plan before going into a position that's pretty risky. If you go into a company like Apple or Google or Microsoft, you don't really need a plan because that is a company that you're pretty comfortable holding for a long-term position. If it starts going up and down with the market, that's not that upsetting. But for a company like some of the ones I own, like Twitter, Snapchat, Macy's, stuff that could drop 10 to 15% in one day, it's important to set up a trade plan because there's a lot of emotions that happen with these double-digit moves. If you see your stock go up 15% or down 15%, you're going to have a very strong emotional reaction to that. And so having a plan set up before that happens is very important because emotions can cloud your judgment, which is something I've been very vocal about in the past couple weeks now that I've started taking a lot of psychology classes. But as these emotions start to cloud your judgment, if you don't have the plan set up in advance, somewhere where you looked at it with a clear mind and you've kind of looked at all the numbers, you've seen where the support and resistance levels are, you can set up a plan beforehand where if it drops below that level, you don't have to sit there. And there have been times in my career where I'll sit there and I just look at a stock for so long and I just get to the point where it's kind of a flip of a coin whether or not I'm going to sell it or stay in that position. And it leads to a lot of regret. The fact that I came back from my class, I ate a sandwich, opened up Thinkorswim, saw that it was down below my support level, and I sold it immediately, didn't even think about it. Next thing I did was I wrote it in my trade journal that this is where I sold it at, and then I'm going to fill in the rest of it later. But having a plan in place makes it so you don't have a lot of emotions attached to selling a position. Selling at a loss really hurts, and it's hard to do. This is an experience I've had with bag holding where you're down in a position and you just hope that it'll come back to the level that you bought it at so you can sell it pretty even. You see a lot of times people online saying, I'm never going to take a losing trade because I'll never sell. And that is a horrible mindset to go into. If you're saying that for a company like Apple, Google, or Microsoft, you're probably fine because if you hold for long enough, it'll probably be all right. When you're taking positions in more volatile stocks, like I've mentioned, Macy's, there's a chance they may never recover. And I was taking a risky position, so I need to have some way to protect myself on the downside. And I took a 15% loss, and in my opinion, that was worth the risk compared to the amount of potential gains that I saw in that. Macy's is a company that I will probably take a position in the future. Some of the things I was worried about was the dropping below the $14.50 mark, which happened. And the other way I would have traded, which I wrote down in my trade journal, is if they cut their dividend, which would have pushed the stock way lower. So having a plan in place is very important. Thanks for watching this video. Hope you guys learned something, just kind of saw the way that I take trades. I've tried to be very transparent on this channel when things don't go well and explain my rationale for why I ended up selling a losing position. And Macy's is a great example of that. I thought it was a good position. I let it run its course, and when it dropped below the level that I had set back in January, I sold it, and I'm not that upset about it. And I hope I get an opportunity to come back and take another position in Macy's and have it be more profitable next time, but I thought it was time to cut losses and start looking towards other options in the market. Also, with the market being so volatile right now, I probably won't be looking for other options for a while. I'll just have that money be sitting in cash until things start to steady out a little bit. So thanks for watching this video, and I'll see you in the next episode.